Yeah, okay. Thanks everyone for joining. These are really popular, both live and on demand. So I get the easy bit that I do the introduction and sort of wrangle the Q&A towards the end. We're going to be covering sort of the main bits, the rules, TPD, underwriting, etc. But Catherine will take you all through that. All questions are welcome. No questions are sort of daft or off beam. As Catherine said, she's always willing to take very specific questions too. So Catherine, I'll let you get underway, and during this I will, and feel free to put questions in chat as well if you don't want to do them verbally. We can handle both. But while Catherine's talking, I will go off screen to let her talk. But over to you, Catherine. Looking forward to this.
Fantastic. Thank you, Lee. So we are recording and it does go live, and I'm not savvy enough with tech to be able to, keep people out or not. So if you prefer not to be on the video, like when we do the recording and we put it out there, do feel free to turn your videos off. Like Lee said, you can always put comments in the comment section if you want to ask any questions like that or anything like that. But and do feel free, if you're happy to speak as we're going along, interact with me if you want to and ask me questions. So I think with critical illness cover, it's one of those things where, I think we have just had it actually where income protection had started to take over critical illness cover in terms of like the amount of sales that were being done. But traditionally, critical illness cover has been always one of those things where it's kind of always seen as being quite hand in hand with life insurance because of the fact that we can actually, sorry, my cockapoo is just about to run off, so you might just see him in the background. What a delightful, let's cover that up, Fudge. Honestly, darling. Right, sorry, just going to let somebody else in at the same point. So, with the critical illness cover side of things, it does come hand in hand with life insurance. We can mix them together, and there are very good reasons for doing so. It might well be, if you just give me 1 second, I'm just going to let him out, because if not, we're not going to hear the end of this, are we? No barking. Right. And we're just pretending none of that happened. Okay, at least we know it's definitely live and we're just having to get into it. So I'm always asked, which is the best critical illness cover contract? And the answer is that there isn't one that is the absolute best. That's my opinion. Now, you do have things like CI Expert, which is done by Alan Lakey, absolutely phenomenal system, which will rank critical illness policies. It'll rank the quality of the amount of conditions, the terminology and the definitions that surround those conditions that are listed. You can do historic comparisons, and it is something that I do use with my team. One of the reasons that I personally think that there isn't one specific ultimate critical illness contract is the fact that you can't know until you know your client's history, until you know their medical history themselves, their family medical history. It can be, at that point, before that, it's complete free for all. And it can be an absolute nightmare because with most insurers, we have generally 4 options. We'll have their core cover, which is in a sense their basic cover, which is still brilliant cover. You then have core and children, and then you'll have enhanced and enhanced with children. And if you've got quite a lot of insurers, we do a lot of the insurers in the market. When you get your comparison, it's huge, and it's really, really big and hard to sort of go, well, hang on a minute, is that one there? Is that one there? Sometimes some of them seem to sometimes bring in reviewable premiums at times, so that can bring in an extra dynamic to it. You're just like, where on earth have they come from? Obviously, really, we want to do guaranteed premiums wherever possible, because in the long term, they are going to be the much more they'll be the best option financially for the clients, because eventually if they are reviewable and they increase it doesn't end up being the greatest at certain ages, especially around the ages when we're very likely to get diagnoses and be claiming. Essentially, with critical illness cover, we are talking most claims with most insurers up, it's like 98% success rate. That 2%, people always wonder, and it's very right to wonder what that 2% is, because I am of that mindset of going, I'd be one of the 2%, so tell me why we're not going to be paying out. The 2% generally comes down to sometimes people not realizing that their cover has ended and try to make a claim and they don't realize that it has ended. It can be that people haven't kept up to date with their premiums, so when they come to claim, the insurer says, well, you've not actually paid your premiums, so we've cancelled the policy. Or sometimes they might say, well, look, if you backdate these premiums, we will be able to still consider and keep the policy live, but that's that's very much sort of like more like a case-by-case basis if they're able to do that, depending upon circumstances. And then we have the other thing, which is very relevant to critical illness cover, which is the not meeting the definition for the claim. And we will go through that because it's very, I always think it's important as an advisor to be upfront about when these policies might not pay out, because there are situations where clients will automatically think this is going to pay out for me, and it won't necessarily pay out. So we want to have that conversation early on. But essentially, when you are looking at a critical illness contract, if you are covering cancer, heart attack, and stroke, you've pretty much covered the main times that these people are going to be claiming for. Most policies cover far more conditions than that. If you were to look at the ABI's critical illness guidance, there's a good list of conditions that insurers should be including if they're going to say that they do have a worthwhile critical illness contract. But we do have policies that obviously cover like the essential ones, just the heart attack, cancer and stroke, because they are the main ones. It's usually cancer. That's the main one that's going to get claimed on out of anything. We then closely followed by heart attack and stroke. And then the fourth one, which is quite a high claim rate as well, as multiple sclerosis. So if those four conditions are covered, then whether or not it's kind of core or enhanced, it's in some ways, it's kind of like, well, in the grand scheme of things, does it matter? If the client can't have the enhanced option, is the core a bad option? Not at all. Obviously, we always want to have as much cover as possible and covering anything and everything, because you just never know. You might be one of the people who happens to have one of the conditions that's not one of the key four. But all the critical illness contracts are good. Okay. A really, really key thing with critical illness cover that we just want to get from the start as well, because not only do we have core and children covered, and enhanced and children's covered, we also have including life insurance or not including life insurance into this as well, which brings up a whole new dynamic. You've just doubled all the comparison potentially that you're looking at, depending upon the insurer. Not all insurers offer standalone critical illness cover. So standalone means that there's no life insurance element to it. It's just purely critical illness cover. So with some people, we maybe speak to them, and I speak to them, I'll go, right, so we're looking at critical illness cover, and I'll personally be looking at the option that includes the life insurance as well, and let you know the price of that. And people sometimes go, I've already got life insurance, I don't need it. And I'll go, but let's talk about the survivability clause. And usually when you discuss this with a client, the majority of the time, I'm not saying every time, but the majority of the time, the person says, absolutely include the life insurance, please. And with some insurers, it costs no more to include life insurance. Some of them don't even offer it as a separate option to just do standalone kick. Quite a few now do offer standalone critical illness cover, but you must be aware and you must explain to the clients this, because it is a potential complaint risk area as well, which we need to be mindful of. Survivability clause basically means if you do not survive the diagnosis of your critical illness for a certain amount of days, then they will not pay out a claim. So easy example and obviously use these examples with your clients as well. Was that someone asking something? No, I think I'm just going to make sure that everybody's on mute. That's okay. So just as an example, and I say use it with your clients. Let's say, touch wood, it won't happen, but you have a heart attack on Monday and you die on Thursday. If you have standalone critical illness cover, it won't pay out, because it's usually anywhere between 14 and 28 days that the insurer will say you must have survived it for this long for us to pay out a claim if it's purely critical illness cover. So by including life insurance, which it's either not going to cost much, or if anything, sometimes a couple of pounds, because the bulk of a critical illness premium comes from the critical illness, because it's so much more likely you're going to claim on it, rather than die at a younger age, in a sense. Sometimes I've seen it where life insurance has been like maybe, I don't know, even sort of like 15p more, to include than not. It's really ridiculous sometimes, the price difference. And what happens is your client has the heart attack on the Monday, they die on the Thursday, where it's not going to pay out for critical illness, it's going to automatically transfer to the life insurance, so it become a death claim. And most people, when you explain that to them, this go, actually, for that difference, my family may as well have the extra. Why not, in a sense? There are certain rules that we need to follow when it comes to critical illness cover. And again, this is sort of like the things that I like to explain to people when I'm discussing the critical illness cover. Again, talking about the fact that it's a brilliant policy, but there can sometimes be limitations as well, because there can be confusion. So really good example is the fact that when we take out a critical illness policy, we are taking it out based upon that insurer's rules. Then, oh, you're very welcome, Michelle. Sorry, I just had a comment come up saying that it was useful to go through the survivability clause. So I'm really glad that that was helpful. And it is something, if you've not been aware of it, don't beat yourself up at all. So many people don't know about it. And, you know, I will have people bring clients to me to say, and they're really good advisors, you know, they'll say to me, oh, I want you to help the client with this. And I'll be chatting and I'll go, so what have you set up? You know, I've set up this. And I'm like, do you know about the survivability clause? And then they just go, no. And so then we talk about it, and it's a lot more common than you think that people don't know about it. So don't worry at all if you've not heard that, but it's very, very important to know. So we go to like when we're setting up a policy. So I set up a policy for a client on the 1st of June, 2024. I like to say to people, like, we're taking a snapshot of that day. So I say to the client, you are looking at that insurer on that day of that month and year, and you're saying, I can see your contract, I accept it, that's what I want. That's it. If it changes going forward, that change doesn't happen to me because I'm paying for the one that you have set up for at this point, and future ones might be more expensive, they might have different terms, everything's like that. I'll be older, so it would be more expensive, you know, so things like that. And then at the same point, the insurer was looking at you and going, right, on the 1st of June, 2024, I'm looking at Catherine, this is her situation, this is what we're going to charge her for this policy. If in, you know, a few years' time, I develop a health condition, or I suddenly start living abroad, say most insurers are okay with living abroad. There's some caveats that I'll just chat about. There's something extra that I didn't have in my notes that's popped into my head. I do this, go off on side tangents. But let's say something happens, then the insurer's going to go, that's not relevant to us because that was unforeseeable. It's something that's happened, nothing to do with us. As of today, based upon Catherine's health, this is the price. And what we can have now, there's one insurer, Guardian, who will retrospect, if they make changes and it improves the contract, they will give those improved contracts to their existing customers. They're the only insurer that does it at this point. What we can have is that people can then get quite confused as things go along, and we can end up in a really sad situation. So the example that I give is, and it's one that stands out really, really well, and it really takes you down to the minutiae of these contracts. So somebody, many years ago, it was in the papers, they were upset because their insurer wasn't paying out their critical illness claim. Now, they had set up, I think at the time, it was about 15 years prior, they set up critical illness cover with an insurer. And the rule was, if you lose your hands or feet, so really specifically there, plural, both hands or both feet, they would pay the claim. Now, this person lost one, and I want to say, I think it was a foot, but I can't remember properly. So they didn't meet the definition of the claim based upon the contract they'd been paying for. The insurers, and most insurers' contracts now would say loss of hand or foot, and they will pay out the claim. Now, this person was very upset because they said, well, that's what the insurer offers now. But that's the thing. The insurer, that person hadn't been paying the premiums based upon the newer contract, the better contract. They'd been paying the premiums for the older contract. So we just want to really be clear to people, if the insurer changes, that doesn't mean you get the changes as well. And it can be really, it can be really important, especially for complaint risk as well. We want to be very, very on top of that. We also have, with a lot of insurers, what's known as a specified severity rule. So we have, you know, cancer, heart attack, stroke, but they usually say of a specified severity next to them. So one of the key ones to go through, I'll have a quick chat through each of the key three. So heart attack. So when you have a heart attack, there is something known as troponin levels in your blood. And when it reaches a certain number, that would be classed as a heart attack, full heart attack. So you can kind of have mini heart attacks, or your body maybe goes, I'm going to go towards a heart attack, but I'm going to not go fully there, kind of thing. So once it reaches a certain number, that's when the insurer says, yes, you've had a heart attack, we'll pay out. Now, none of us know this number. It's like this mystical number in a sense. I genuinely have no idea what would be the insurer would say yes. And it's good to bear in mind as well is that medical doctors versus insurance doctors will sometimes see things different ways. I feel like in the heart attack, if there was a heart attack, that they would be very, very similar, but you will find, especially with underwriting, which I'm sure a lot of you have seen before, that what the medical world feels is not necessarily risky, the insurance world can feel is quite risky at times. So that again can be quite an interesting dynamic when you speak with clients about different things. So a bit of an, so with the heart attack, so it'll be of a specified severity. So you have to say to them, you know, it does mean that, you know, your heart attack has to have been like a certain level. Exceptions to the rule of Vitality Life and Guardian pops up again. So Vitality Life and Guardian say, if you have a heart attack, it doesn't matter what your blood level says, you're told you've had a heart attack, that's what the specialist says, we're going to pay out. So that can be something that can be a consideration sometimes when you're looking and picking at your provider. But we don't just have that, there are other things as well. And I'll talk to you about some of the main differences that we see in the market. Each insurer has a very, very good contract, and they all do something slightly different, but there are some that really are quite different to others. So it's important to just obviously know what they are. Cancer, again, usually, well, it will be a specified severity. So I like to, and again, use this as an example with your clients. I always say, let's take skin cancer as an example. And I certainly don't negate the seriousness of skin cancer. It can be phenomenally serious. It can lead to people dying, but it's also one that people, I think, generally kind of think of as a, not correctly in a sense, but they kind of think of it as a lighter cancer, like, oh, well, yes, just skin cancer. You know, some people do think that, and I'm not saying that's the case, but I think because it's also quite common in a sense as well, skin cancer, and you do just at times just get it whipped off in a sense. People don't think of it as necessarily something that does lead to like a significant issue in regards to potentially dying. So skin cancer, I tend to, so I start off by saying I'm not negating it, but let's just say that you have skin cancer. It's very, very small. And you go to your GP surgery and they whip it off and you're out in 30 minutes and you don't need chemotherapy, radiotherapy, nothing like that. I say, it's very unlikely that you're going to get £500,000 paid out from a critical illness policy for that. So it's usually, it tends to be more where you've needed to have like the chemotherapy, the radiotherapy, the surgery. Not always, but that is usually when you're getting to the levels of severity where the insurer goes, this has reached a level where you're going to have significant discomfort and for a while, and you're going to need to take time to recover. Not saying you wouldn't if you had skin cancer, you would, you know, obviously, because as well, there's mental health connotations, but it just in a generalized thing, you know, if you have something where it is just removed very, very quickly versus the chemo, the intensive in surgeries and things like that, that's when the insurer is going to pay out. And people, again, they tend to recognize that. And the amount of people, when you say it like that, they'll go, well, yeah, of course, you know, you would expect it when it's more more where you're having to have like that intense treatment. So just prepare them for that rather than having that discussion potentially if they're wanting to make a claim. And then they're like, well, you told me it would pay out for cancer. You never explained to me that it wouldn't, because people hear cancer, they're not thinking immediately, oh, how serious is it in a sense? Well, they are, but you know, is this serious enough for my insurance to claim out? They're not going to think that. They're going to think, I've got cancer, I have an insurance policy that pays out for cancer, I'm making a claim. So that's when I was saying about that percentage that also aren't successful. And when we see that 2% haven't paid out, it's also those situations where people have had maybe a cancer or another condition where it's not been to the same level as getting a full payout. We have partial payouts, which again add to a wonderful dynamic of confusion. He's not listening to me. I don't know if you can hear him barking. I did say to him not to bark. So partial payouts. So if we take most insurers, we either have it's going to pay out 100% or it's going to pay out probably 25% to a maximum 25,000. And that would be often to do with things like carcinoma in situ. So that is a small localized cancer, which again will probably need some kind of surgery and treatment, but it's not seen as this is the really super intense cancer. And I hope when I'm saying that's not being seen as me being lighthearted or all about cancer at all. All cancer is serious, but there are different degrees of it, and the insurers do pay out claims based upon the different degrees. We then have stroke as well. So with strokes, again, it needs to usually be a full stroke. So some people have mini strokes or TIAs, which are known as transient ischemic attacks. And that usually doesn't pay out. But again, you might have somebody come to you to say, well, I've had a stroke and this says it pays out for a stroke. And then at some point you might establish actually, well, were they told it was a mini stroke? You know, what's happening? So it can be worthwhile just delving a little bit more, especially if somebody's wanting a bit of a support with a claim. But again, just those initial conversations with the client to explain and go, you know, it doesn't pay out for sort of like just every version. It'll pay out for the significant majority of versions, but we just want to be very, very mindful of that. So in terms of, it's quite a good idea there to talk a little bit about some of the more different things that we might notice. And the reason I'm going to go through these is to sort of say, we've had this big long thing in our industry about the numbers race. And the numbers race has been an absolute pain in the backside because of the fact that it was just always insurers going, well, I've got 74 conditions, what do you have? And then they're like, well, I've got 75, you know, kind of thing. And they were just doing that with each other. And all advisors were saying to them was just like, can you just stop adding more and more? Because like I've said, the majority of claims are cancer, significant majority of claims are cancer. So whilst all the others are brilliant to have covered, they're still a lowish amount compared to the cancer claims. And what's really interesting about that is whether or not people have it or not. So I always think of Parkinson's, and my dad has Parkinson's, and so that's why it always stands out to me. So I believe the most recent statistics are that every hour in the UK, 2 people are diagnosed with Parkinson's. And from last things as well, breast cancer is 150 people a day, prostate cancer is 130 people a day. So I'm just trying to remember stats from my training off the top of my head. And I want to say that every 5 minutes somebody has a heart attack in the UK. I might have got that one slightly wrong, but no, I think I'm right with that one. It's the strokes I can't remember off the top of my head. So no, it's every 5 minutes. So again, even though all these things are happening, it's still cancer that is the main one. So it's the cancer, the heart attack, and the stroke. All insurers are covering that in their critical illness policy, or all your mainstream insurers especially. So if we do critical illness cover, kind of regardless of where we go, we're doing a good job. Okay, so just make sure you like pat on your back, your kind of thing, like I've done a good job. It might not be the one that's like, you know, rated number 1 on the grand scheme of things, but it's covering the majority of what is going to be the likely claim for this person. We are now at a point with cancer where it's now more than 1 in 2 people will be diagnosed with cancer at some point. So let's look at some of the contracts that are doing things slightly differently, and then we'll go into sort of like some of the specific things in terms of the products. So again, if we think of like Vitality Life, I'm sure you're all familiar that they have serious illness cover, not critical illness cover, which again ends up being quite interesting when we're speaking to clients, because it's kind of like, well, it is the same. It is doing the same, but it's not the same because I'm not allowed to say it's the same. It's covering a lot of conditions. Vitality, the serious illness cover, covers well over 100 conditions. I think most other insurers are between something like 50, 60 conditions. And again, it does kind of come down to that numbers race where we're kind of going, look, just stop doing more conditions, just give us better, you know, definitions. And obviously Vitality Life, Guardian listen to that. And that's why their heart attacks go any heart attack, not just specified severities. And it was just like, brilliant, amazing. And I'll chat about some others who've done some good things and listened in that regard too. With Vitality Life, you do have their serious illness cover. They now have their serious illness cover times 1, times 2, and times 3. And essentially, really stripping it down. If you do times 1, it means they can claim once on the serious illness cover. So if you insure them for £100,000, there's one pot of £100,000 and they can claim on it once. I realise now that I'm going to completely run out of hands to do this with, but if say we do it times 2, so we have 100,000. So something happens and they develop a serious illness, and they can claim 100% of the claim, then they claim on this pot of 100,000, but they still have another 100,000 just in case something else happens, which would be really, really unfortunate. And obviously we'd really hope that somebody wouldn't be in that experience of having that, but it does happen. So they would have been essentially, you've insured them for 100,000, but you've actually insured them for 200,000 in sort of like some ways. And if we have 3 times 3, obviously this is where my lack of an extra hand comes into play. We would have 300,000, so each of the 100,000 pots. And obviously their serious illness cover is based upon a severity scale, so 100%, 75%, 50%, 25%, and it goes down low as well. Now, what's interesting is that it's really hard to know. So say like with Vitality, because they do so many more conditions and they do so many more percentages in terms of severity scales, then there is sometimes the argument starts to say, well, could you actually, is there more of a chance of making a claim? Because with another insurer, you need to be 100% at this, you know, you need to be at this severity to get 100% payout. But maybe Vitality, you know, would have actually, if you're only like here in terms of what the other insurer needs, but maybe you'd get a 75% payout with Vitality. So there's that kind of an argument. The trickiness is that we don't know the different levels. So it could be that with this insurer over here, they're going to pay out 100% due to this person's diagnosis. But actually, if you look at Vitality, where they'd pay 100%, another insurer pay 100% over here, maybe Vitality would only pay 75%. So then they're not paying the full amount. It's also hidden in the background with the manuals and the rules and everything like that, that it's not easy to know that. And also with Vitality, a benefit is that they also do some dementia and frail care cover that does continue for a while after the policy does end. So it is worth having potentially a look at. We then have AIG. So AIG brought out a couple of years ago. Now, this might obviously be changing, as we're all aware. Aviva are buying and absorbing AIG. And we've just had notification of a change yesterday where, so just in case anybody doesn't know, AIG were one of the, well, really the key insurer in the UK who could potentially do insurance for expats. So people not living in the UK, but with a UK liability. And as of yesterday, they have removed that, unfortunately. So for anybody here, even if you do have a client that was going through the application process through that route, I'm very sorry to say that they've just immediately stopped it. And you would need to go to international routes instead, which are absolutely doable, but it just means that you'll have to change the process. So back to critical illness cover. So AIG, they came up with this thing of saying any neurological condition of a specified severity, which is really good because with other insurers, we do have things like Alzheimer's, dementia, Parkinson's, and they all say of a specified severity of persisting symptoms can sometimes be there as well. And what's good about the AIG one, which hopefully will maybe become more took up upon in the industry, maybe Aviva will take it on, we don't know. But ultimately, they became much more of a catch-all, which was brilliant because it was a case of, so it isn't just Alzheimer's, dementia, Parkinson's, and a few others. It's any neurological condition. And that does take into account that whilst, you know, they are covering the majority of neurological conditions, there are some really serious neurological conditions that are rarer but are diagnosed, and that will cover it and it'll absorb it in. So having much broader ability to assess and take into account these things is brilliant, because if not, it would be kind of, the assessment would be left to maybe the total permanent disability, which is one claimable condition out of all of them, which we will cover because that is an extra one that does have its moments. Oh, I've realised I have definitely been chatting quite a bit. Well, we'll try and keep to 45 minutes. I'll try and behave myself. So we have that. So brilliant. We have Scottish Widows. So they went completely against the numbers race, and it was really interesting because they launched an update of their contracts when another insurer did. And this other insurer was just like, we've got 19 more conditions than Scottish Widows. And it was like, okay, so let's have a look and see where that is. And the reason being is, and this is another reason why we don't want to go by numbers. So Scottish Widows say that they will pay out for a claim for any carcinoma in situ. They do not state a specific place. Whereas with other insurers, they might go carcinoma in situ of the breast, carcinoma in situ of the, I'm going to say testicle, I think they do testicle, carcinoma in situ of somewhere else. And so they ended up with a list of a huge number of conditions because they were listing all the areas that they were going to cover. Whereas Scottish Widows just said, well, we'll just do it anywhere, which actually is much better. It doesn't stick it to specific places. And it meant that, yeah, they had less numbers, but they had much better quality when it came to it. And then we have other things as well. You know, we can be, so Guardian, Vitality Life allow you to add on children's cover to an amount that you feel is suitable. I believe it's up to 100,000 per child. Other insurers, it is like a maximum of 25%. No, not 25%. Oh, yeah, I think it is. Yes, it's 25%. Bear in mind that older contracts might do 30% for children. So if you are looking at reviewing a policy, you must take into account the older contracts as well. I did talk about that more in the last session, which was the perks and pitfalls of client reviews. So go back and refer to that. I won't refer to that much here. And with Zurich, we can, they've now set it up so that if a child is covered on an adult's plan, then when the child reaches a certain age, they can set up their own critical illness plan in their own right without having to go through the medical underwriting and everything. It's probably not going to be huge sums of money, but it is still getting the younger generation to thinking, do you know what, this is actually really worthwhile and I should be looking at this. And or if not, at least triggering parents to be thinking, do you know what, we should really be looking at this. So total permanent disability, just to have a quick chat about that. Pain in the backside, absolute pain in the backside. Because of the fact that it's all to do with the majority of the time, your ability to do your own occupation. We can also have working task definitions that can sometimes happen depending upon health conditions, other risk factors. We might find that some insurers just will not offer TPD to somebody, but it's quite often that you'll have exclusions. If somebody's had anxiety, if somebody's had back pain, they may not have any influence at all on the terms for the life and critical illness cover side of things, depending upon their actual specific disclosures. And then on TPD, similarly with waiver premium, you will have a mental health and back exclusion. And the mental health exclusion isn't small. It's mental health, depression, chronic fatigue, ME, and it's this list. Fibromyalgia often gets put in there as well. And you just sort of like, okay, so that's a paragraph. So I'm not just saying mental health, I'm giving this person this paragraph. And then also you've got back, exclusion. You can then sometimes have like, well, we're going to exclude the back. And it can be really confusing at times, So I was speaking with somebody recently where it hadn't been completely clear, when you were looking at it, because it also will then say sort of neurological conditions of the spine and all this kind of stuff. And it's because of the fact that the insurer was doing a bit of a catch-all to basically say, look, you've had some back pain. We don't know what's going on in there because you're not having MRIs, you've just had a twinge, but there could be something. So what we're just saying is, we're not going to say we can't offer you cover. We're just saying for the total permanent disability that we're not going to be able to offer, we won't cover claims in regards to those. And it is all to do with your ability to work. So, mental health and back are the main reasons that people do stop working. So again, they're just trying to be very, very mindful for the insurer's own risk profiles and things like that. We've got somebody here who has something already, which statistically is going to make them much more likely to be unable to work at some point. So we're just going to, say, like, you've got something, we're not going to be able to cover that. When you speak to a client, it can be really hard though, because it's like, everything's absolutely fine, but you've got an exclusion on this. And it's a case of, well, what's that? And just be very mindful to say, it's one condition out of all of them. It's not an exclusion on cancer, heart attack, stroke, your main three. There is not an exclusion there in this situation that I'm talking about. It's one condition and it's incredibly hard to claim on. The last stats that I heard were that TPD success rate was in the 70%. I'll just had a question. Yeah, I'll go into that. So it's really, really, I just say to people, I'm not concerned. If TPD is something where you can pay for it as an extra, I give clients the option to include it or to not include it, because of the fact that it's obviously, even though 70%, it's like, well, 70% is better than 20%. It's still not a great thingy. And I've been involved in a couple of TPD claims and they were not pleasant at all. And they took a significantly long amount of time. So I personally, I'm not too fussed if there's an exclusion on there. In terms of generally on the underwriting side of things, when we're looking at things, so just some examples, so cancers. We tend to find that with cancers, if somebody, and that's, sorry, just going back for a second. So as well, if somebody already has a condition, it won't be covered by the critical illness policy. So somebody already has Parkinson's, as an example, if they are able to get Parkinson's, it can be done. It is unusual, but it can be. It's not going to cover them for Parkinson's. It will be excluded. If somebody's had breast cancer, for a good amount of time, there will be a breast cancer exclusion. What's really important to do as an advisor is that some insurers would do a breast cancer exclusion. Some of them will do a full cancer exclusion. So if you're seeing full cancer exclusions, do everything you can to avoid that and get a localized one. It might be that it's more expensive, but when you do speak to the client, give them both options. But ultimately, we do just want, if there's going to be exclusion, for it to be super, super localized. Another thing that comes up quite a bit, and we're seeing it quite a lot at the moment, and especially for the women, is smear tests. So it's very limited at the moment. So if somebody's had a smear test and it's been abnormal, for critical illness cover, a lot of insurers will decline until there has been a normal smear test done. There are some options where you can do it, but there would be a cervical cancer exclusion until the normal smear test has happened. Again, a lot of people, we're covering significant majority of bases. A lot of the time with abnormal smear tests, it is just something where the body's just had a bit of a moment. It's not been anything funny. It's just happened to be on that day. The cells have had a little bit of a thing. Repeat tests are done. When you have that repeat test done, assuming that it's normal, reapply, get that exclusion removed, because we wouldn't want to just leave it on there. But going back to the cancers, so this is kind of going to go against what I said before, the survivability clause, because I will automatically try and include life insurance wherever possible. But you can have issues sometimes with cancer. on the basis that if somebody's had certain cancers, certain levels, you will find on the life insurance side of things that the insurers will often do what's known as a per mil rating, which is usually a very costly increase to the premium. But if you did it just as the critical illness cover, the premium wouldn't be significantly affected. There would be an exclusion, but there wouldn't be a significant effect to the premium. So in some cases, it can be worth splitting the life insurance and critical illness cover. But again, give your client the option and tell them about that. I must say, watch out for the localized exclusions. Breast cancer, very common exclusion. And prostate cancer isn't a common exclusion, but it can happen. And this can happen from someone's own medical history and also from family medical history too. Another key thing in terms of exclusions and things like that to bear in mind is going between core and enhanced. I always go enhanced first, because I say to my clients, I'm going to go all singing, all dancing. Let's get everything brilliant. If it doesn't feel right price-wise, then we can bring it backwards. It's much easier to do that, especially when you speak to clients. If you say to them, oh, it's going to be £50 a month at core, oh, but the enhanced is £80 a month. It's just a psychology of how you pronounce it and things like that. And so we would be doing it in the case of, saying, right, okay, let's do the enhanced and bring it backwards. Bear in mind with that if you have clients with certain conditions. So as an example, Crohn's is a good one. Crohn's isn't always covered on critical illness contracts. So a core policy with an insurer might not cover Crohn's, but their enhanced might cover Crohn's. You've got a client with Crohn's. If you do the core, you're going to give them the option. There's going to be no exclusions. If you do the enhanced, you're going to give it to them. There's going to exclude Crohn's. Again, it comes down to the psychology of how a client is able to accept that and look at it. So maybe have a chat with them before you give them the pricing and just say, look, sometimes these ones, they can have exclusions for pre-existing conditions, but the rest of it is still a lot better. Are you okay to look at that? If not, give them the core, because then they're going to feel much more content because they've not even seen that Crohn's is a potential option. You also have that with psychosis. So some enhanced contracts will cover psychosis. So you might have somebody with a mental health condition. Doesn't even need to be something like bipolar disorder, borderline. It can be other conditions as well, which probably ones that we would think of as quite more common in a sense, can lead to a psychosis exclusion on the enhanced. And you would want to just make sure that you do that, match that sort of carefully. Heart attack. This one's often asked. If you've had a heart attack, you are not getting critical illness cover. On the current standard market in the UK, it is just not going to happen. Somebody could be covered through their company, through their like a group critical illness scheme, will have pre-existing condition exclusions. The person will be taking ongoing medication with them having had a heart attack. Whether or not, if something else develops, that it will then come across and be kind of linked to those conditions and the medications, we'll never know until a claim happens. In regards to the question that's come up, yes, you can get critical illness cover for diabetes. Far trickier for type 1 diabetics, but yes, type 2, you can potentially get critical illness cover. Stroke, critical illness cover is a maybe. Times it can be, and again, we're going to go back to the women here. Sometimes the mini pill can cause a stroke. So if somebody has developed a stroke because they're taking the mini pill, and obviously they're no longer on it and they're fully recovered, then they can potentially be able to get critical illness cover. If you had a stroke due to a traumatic brain injury, a head injury of some sort, again, you might be able to get critical illness cover. But again, we would be looking at the person really being fully recovered. And those are quite specific situations. So generally, it's not going to be available. And going to that fourth one that I mentioned, the multiple sclerosis, we do potentially have an option for critical illness cover, but at the moment, they would need to be 10 years without any changes in their MRI and in terms of the lesions that are shown in there and in terms of their symptoms and things like that. So a couple of last things just to be mindful of, and then I do know there has been some questions as we've come along. So something to bear in mind is with children's cover, if you put children's cover on, it's been an add-on. Some insurers will automatically kind of remove that at certain points. Your child's at this age, so we'll take it off. Not all of them do. So just be mindful. If that child is now at an age where they're no longer covered, you probably want to get in touch with the insurer and see about removing that so that people aren't continuing to pay for that when there's nobody that can claim on it. There is also the argument about, do we do critical illness cover with children's cover for people who don't have children? it is worth having that conversation, just to say to people, you know, and also be very mindful when you have this, because I'm very, very mindful of the fact that some people don't want children, some people can't have children, and that's very, very sensitive. And so we might want to just be saying to them along the lines of, right, if there is any chance that you might be wanting to have children at some point, it can be worth including it, because of the fact that some insurers do cover certain claims in regards to children when they're born. So sometimes if they're born with Down syndrome or other conditions. I had a couple that I'd supported, and I'd done them this situation. We've done children's critical illness cover, and I'd spoken to them when we were reviewing, and they were like, oh, well, you know, our kid was born, but there's actually this and this was developed. And I was just like, hang on a minute. And we went back, obviously looked at the original policy. They could absolutely make a claim, and it is worthwhile taking that into account sometimes. And as with anything, I do very conscious of our time. I was going to go into the fact that we need to make sure how different it is to income protection cover, because a lot of people think, well, critical illness cover is going to pay me if I'm unable to work. Not necessarily, that's not what this is for. Under the total permanent disability, maybe, but we know that that's not an easy thing to claim on. If people are really wanting something, saying, you know, well, I want to make sure that if I'm ill, that my income's okay, then we do need to be looking more at the income protection, just making sure that the client is fully aware of the limitations for what their goal is and what certain contracts will do. So that's the majority of stuff for me to say. Lee, we do have some questions, I believe.
Yes, we do. Feel free to come back on screen if you want, folks, as well. Michelle's asked a couple of, well, 2 or 3 really good questions, actually. The first one is, how do you weigh up the value-added services? This can be confusing, e.g. L&G private diagnostics, Vitality of 12-week cancer program. Also, some insurers cover birth defects in pregnancy for enhanced options, critical illness cover.
Yes. So in terms of the value-added benefits, I'm probably going to say something that isn't popular, but I'm truthful. I don't take them into account at all, because ultimately they're non-contractual and they could be removed at any moment. Value-added benefits have come in as kind of the new competition side of things. So essentially, insurers, especially with life insurance, they've priced themselves so low to compete with each other that their competition now is the value-added benefits. So I don't see value-added benefits going, but ultimately, it's not something that I pay a lot of attention to. Now, that can be because of the fact as well that a lot of my clients do have risk disclosures, which mean I only have usually a couple of insurers that are going to be right for them. I do use an example though, where I did have a family, and I was doing a quote for them, and I did take into account the value-added benefits, because I was like, right, this is, you know, basically £5 a month with this insurer. However, for £5.30, I can put you to this insurer, and you're going to have da, 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 da. And I was just like, so for £3.60 a year, I do suggest that we don't go cheapest, and I suggest we go for this one. But I think the key thing is, and always, is to give them the choice. Now, most insurers now, so at the time when we're doing that, that was very much the early stages when it was still some were doing value adds, some weren't, which is why I was very much, look, I really think we should go here. Now, to me, they're all pretty much similar. You know, they're very similar. There's often GP services involved. There's also often mental health involved. Mental health is limited. So if you do have some of the mental health history, be very mindful to say to them that the mental health support services can be quite restrictive if you've already got a mental health condition, because you just want to be conscious of that, because it's not always a positive experience. Generally, for a lot of people, it can be fine, but I'm very aware of situations where it wasn't fine.
Thank you.
Yeah.
Being cheeky, can you tell me what your experience is of the external contracts with people like Square Health?
Square Health is brilliant. Yes,
Okay.
you've got things like Square Health, Teledoctor, people.
Red Arc.
Red Arc, yeah, absolutely. So I know the directors pretty much at all of these, and they're really, really nice people. I've actually been to Red Arc's offices and met quite a few of their nurses and stuff. They are lovely, and I've seen what they've done for people, Red Arc, in terms of bereavements, in terms of children coping with bereavements. I've seen what they've done for me in terms of the help I've had. I've seen with Square Health, what I've used them as well, the GP services. They're absolutely brilliant. The one I haven't used is like the, which one is it? What's the name of it? I do it in my training as well. This is terrible. The one where best doctors, that's it. I've not used best doctors, so I can't say, you know, from personal experience, in terms of how good best doctors are or their process, but each of them do something slightly different, and they all do brilliant things. It's really, really hard. They're not really in competition in many ways because they do things slightly different, but insurers will change. So at one point they might have Square Health, but then they might move to Teledoctor. They might have Red Arc, and then, you know, so I don't put a lot of stock into saying, right, you know, and if you were, so I did this in a previous one as well. If you are writing in your recommendation reports, there's value-added benefits, make sure that you state value-added benefits that are non-contractual and can be removed or changed at any time. Because the last thing you want, again, is someone to go, well, you told me I was going to have access to GPs non-stop every day, and then the insurers suddenly remove it, and, you know, you don't want that kind of issue. So I personally go by, because of my clients, I go by which insurer will insure them. That's my first point of call. But then I do go by price. And so I go, well, and then I'm starting looking at it and I'm thinking, right, is there somebody else here that I think's better for away from this cheapest price? So as a good example, and other ones that I've mentioned earlier, I might have an insurer that's the cheapest, but for £3 more a month, I might have Guardian, who, with Guardian, I'm looking at the heart attack definition, any heart attack. I've got automatic waiver of premium in there as well. Depending upon the contract you take, you know, you've got they've got the best terminal illness definition, or one of that's available in the market if you choose the right one now, because they've now brought in two. So I would then say to my client, right, I've got these two options. This is the cheapest. This is the one that's like £3 a month more. This is the reason I would like you to consider them, and go from there. And then let the client make that choice. I don't even talk about the value-added benefits at that point, because the only thing I can be certain of is this contract that's going to be guaranteed and set in stone that the insurer cannot do anything to. Once it's in place, the client's in complete control. The insurer cannot revoke it, but they can revoke the value adds.